Alright guys, so things are heating up between China and the US again. Now we don't just mean the tariffs, that's going to be an economic struggle for years to come. China is now taking active steps to dismantle US financial hegemony. Besson has talked a lot about rebalancing trade with China, that Beijing has to manufacture less, consume more, and open their markets even further to US exports. Now all that is fine and good, but let's not forget that China can play the exact same game as well. We should also remember how Besson tried to corner China, and it was done in a very sneaky way that goes under the radar of many analysts out there. It's not as flashy as a 100% tariff, but the effects can be even more profound. A month ago, Besson told the Asian Development Bank to essentially stop giving loans to China. The plan is to stop allowing the central government and Chinese companies from accessing capital to expand overseas. Now, China doesn't really lack capital. They have $1 trillion surplus from trade. However, having access to additional credit lines is always a good thing. The US can always ramp up the tariffs again and push down Chinese exports. And this could put additional pressure on company earnings in China, and never say never. Trump is so mercurial that this is definitely a possibility. And Besson's adventures to contain China aren't just restricted to the ADB. He also demanded the World Bank and IMF to reform their system, which obviously means to relook at their loans given to China. He wanted them to kiss the ring, and here's his little speech. While it has been at the expense of many Western markets, China's rise has been rapid and impressive. Now Beijing is living rent-free in his head. Besides that, he also connected US approval of Biden's $4 billion in funding to the reforms. In other words, listen to us and you'll get the money. Remember, this isn't a charity gift, it's a loan where the US will also enjoy interest payments on it. But it's now being used as a bargaining chip to squeeze China. Now, to be sure, this is America's prerogative, and it's their money after all, but there will be blowback effects, especially from China. Until today, Trump still underestimates the Chinese economy and Beijing's reach. He still believes the tariff pause was doing them a solid and not really about saving the US economy.
150 countries that want to make deals. You know, you have a lot of countries.
The market was really happy with the China situation and the sit down
They were.
With
And
the
you know
Treasury
what?
Secretary.
If I
Is this
didn't
the
do that
beginning?
deal, if I didn't do that deal with China, I think China would have broken apart.
Not us, them.
We weren't going to break. We're not going to break. They would have broken apart. You know, our country has a lot of spirit. And you know why? Because of November 5th.
So there's a lot of cognitive dissonance and weird thinking going on in the White House. But China's next card is going to throw a wrench into US financial hegemony. And welcome to episode 2 guys, Beijing Strikes Back. China's Asian Infrastructure Investment Bank is expanding. Now this is a global multilateral bank that is led by China and launched in 2016. Now they want to open offices in two of Asia's top financial hubs, Singapore and Hong Kong. And this will be their biggest expansion and is a really aggressive move to build their footprint. It's really a move to reduce America's influence in the financial game. Whoever can issue more loans to the world gains the ability to dictate terms. And this is the last piece of the economic war that China is still behind in. Well, they are now moving to change that. There are three important points around the Infrastructure Bank or AIB we must know. Firstly, this isn't a fly-by-night operation. It has over $57 billion in assets, including loans. They have also committed almost $52 billion in funding to 38 member countries. And guess who's absent from the membership list? It's the US and shouldn't be a surprise. Hell would freeze over if Washington starts lending money to help China build its influence. Because it is controlled by China to a big degree, make no mistake about it. China holds 26% of total voting power, which gives Beijing veto powers over big issues, and this includes membership approval and new policy changes, just like how the US has veto powers in the IMF. Now, moving to expand the bank's reach is a sign that China is on the offensive. They are making use of Trump's America First and flipping the entire plan on its head. If the US doesn't want to help the world grow, we will step in and help out. And of course, this grows China's footprint as well. As we mentioned before, Washington is turning inwards while China is globalizing the world. They are going outwards. Even European countries like Germany and the UK, they are members of the AIB. But I want us to focus a bit on a type of loans given. The AIB is supposed to be a multilateral bank, but we suspect there's a good deal of overlap with China's Belt Road projects. The bank has given loans to their member countries, 38 of them. The majority of the projects financed are in the energy and transportation sectors. 45 approved loans went to the energy sector alone. Together with transport, almost a third of loans were given to heavy infrastructure and construction projects. This is quite curious, isn't it? And once we draw the connection, you'll realize why growing this bank is mission critical for China. Take this $75 million loan given to Uzbekistan. It's a project that revolves around wind and battery storage systems. I think we are beginning to connect the dots here. Just sit back and ask yourself a very simple question. Which country is the world leader when it comes to renewable energy tech? China is the leader in more than just solar panels. They are at the cutting edge of nuclear power, solar power, wind power, and of course, battery technology. CATL itself is the world leader not just in EV batteries but battery storage systems as well. So let's break down China's potential involvement. The project has been awarded to HDEC, which is connected to Power China, a state-owned company. The name itself should be ultra obvious. Secondly, the project plans to use wind turbines from Chinese manufacturers, Envision and Sany. So the money loans will be used to buy Chinese goods. Finally, there's a good chance the battery systems will come from China as well. CATL and BYD, they are global leaders in battery technology. They probably corner half of the entire market together. So you can see the enormous advantage China has with the AIB. By supporting and expanding their multilateral bank, Beijing is reaping enormous rewards. Replacing loans from the US and American banks is just one thing. What China is doing is quite simple but incredible at the same time. They are combining both their industrial economy, their industrial capacity, together with the global financial system. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. And let's make it a little clearer with yet another SEANFOO chart. By turning inwards, the US is actually taking a big leap backwards against China. China's doing three things at the same time. The first is giving loans to build influence. If you're a BRI member or Chinese trading partner, chances are you will get the loan you're asking for, provided, of course, your project makes economic sense. Secondly, by issuing loans, China can chip away further at the US financial system. Also, either make loans in a USD, allowing Beijing to deploy their huge dollar reserves, or they can convince the applicant to take an RMB loan. It's a form of de-dollarization, and that puts more strain on dollar dominance in global markets. Finally, the money from the loans can be recycled back to China. The borrower can use the funds to buy Chinese goods and hire Chinese labor, Chinese contractors to get the project done. It can be anything from solar panels to wind turbines or even nuclear reactors. China is the world's factory after all, and without a doubt, this is a game changer. This entire arrangement helps Beijing grow their own tech ecosystem. Members that take loans from the AIB will also be helping China's manufacturing grow. And realize that this isn't a coincidence. China doesn't just fire away from the hip. Everything with them is timing, timing, and timing. During the recent ASEAN, China, and Gulf Summit, Beijing made a very pivotal statement. China, ASEAN, and GCC countries can build a dynamic economic circle and a growth pole, which carries great significance for our respective prosperity. They will use the AIB and other global banks to gain friends and build influence Napoleon Hill style. But let's also stay on this theme of de-dollarization. It's time to do an update and give everyone a reminder that the world is moving away from dollar assets. Now, some are shifting their allocation to global stocks and bonds, and when global currencies appreciate, suddenly a ton of investments are now on the menu. But China is sticking with the tried and true asset. China just imported a huge amount of physical gold, and this is a mixture of both commercial and central bank demand, but the number is simply mind boggling. An 11-month high of 127 metric tons of gold entered China. Beijing is basically swapping away their dollar holdings to hold a real store of value. The entire environment in China is really pro gold. Now, if you go shopping in any Chinese city, there's probably hundreds of gold shops around for retail investors. Demand is through the roof. And when it comes to the commercial banks, the PBOC also increased their import quotas. They are pushing their finance giants to bring in more physical gold. Now, we reported a month ago about how China is telling their big boys to go for gold, and is obviously ramping that up right now. And this shift is really important. China has a population of over 1.3 billion people, and their middle class is growing, so they have to find places to store value. Buying property is still a no go. The collapse might not be over just yet. Some savers were buying dollar assets like stocks and bonds, but thanks to the trade war, Chinese investors they're now taking their money home. And the most obvious avenue to park their savings is in gold. But let's talk a bit about China's central bank buying as well. The Chinese economy is the world's largest producer of gold, but it's not enough for them. They want to drain the West of the global reserve asset. And this chart explains where the money is coming from. Their US bond holdings went from well over $1.1 trillion 5 years back to just 760 billion. At the same time, their gold holdings flew to the moon. The Chinese central bank is shifting their allocation from dollars to physical gold bullion. China is giving a playbook to the world. They find it crazy to fund their own containment by letting the US government money. Even if that isn't the case, funding the US is also very problematic. Whoever is the president will always default to higher deficit spending, and that pushes the national debt closer and closer towards the default. And when day X comes, when financial Armageddon happens, you don't want to be caught holding a ton of paper bonds. China buying gold is basically front running this disaster. Now, when people like you and I we buy gold, we watch the price, don't we? Most of us try to time the market to a certain degree. We hope for the price to fall so that we can buy more. Well, China doesn't play that game. They simply don't care and they keep buying no matter what. Even when gold hit 3,500, China is still buying. Even when gold is going to hit 4,000 down the road, best believe that the PBOC won't stop buying. Their demand is not price sensitive. To them, getting out of dollar assets and putting it in a neutral reserve currency is mission critical. And when we buy gold, it's either to store value or to wear it and look good. But for China, it's different. They are buying it to sanction proof themselves, and it's really existential here. Or maybe China is wrong, maybe we are all wrong and the Trump White House is right. Perhaps they have everything under control. Levitt just told us that the deficit is actually going down.
Is the president okay with this bill adding to the deficit?
This bill does not add to the deficit. In fact, according to the Council of Economic Advisors, this bill will save $1.6 trillion. And the president absolutely understands and hears the concerns of fiscal conservatives and of Americans who want to get our fiscal house in order. That's what the intention of this bill is. There's $1.6 trillion worth of savings in this bill. That's the largest savings for any legislation that has ever passed Capitol Hill in our nation's history.
But let me know what you think. How far will China expand their global bank? And will the Chinese ever stop buying gold? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.